Hello and welcome. It is the 27th of March 2019. My name is Derek and welcome to the Money Charts channel. This is Dash against BTC, which, when we look at the grand scheme of things, is overall volatility right now and here, compared to back then, most certainly very small. But the math that I'm most amazed about is putting two coins together and dancing, having a fun party, if you will. And as I mentioned earlier, I'm doing so within this in theta. You basically divide one by the other. Matter of division. And among such, it can create interesting situations not within its BTC cross. And this is what I find very cool within it. Each day has its own unique moves. Therefore, there could be situations where let's just assume theta and dash, and you can put any of these two together because this can happen with any two coins. And you have a situation where one of your two coins has a spectacular move, sort of like we've seen with theta recently. And it's a unique move, and well, you'd be selling that for if you were trading it with dash in that of dash. And let's assume it's one of those spots where it held its gains and then it went sideways after it went up, say, 80% or 60%. And maybe even better yet, maybe it went down 10% or 7. And yet Dash would have a gain of 25 or 20% that one day. So now all of a sudden, even though Theta would be slowly down, it would be actually really decently down. So then I can sell Dash for Theta. And then maybe the next day Dash gives all its gains back, so Theta goes up, and it's just even a supreme gain. So things like that come into play. Now this can come at cost in not having orders in, but I'm going to talk about that with this bottom line though. For BTC withdrawals on most sites are 50,000 Satoshi. And if you're a big trader, it's not much anyway, but it is still 50,000 Satoshi. It's a couple bucks US. And when we have other coins with much, much cheaper withdrawals, those are the ones that I want to focus on. But you are taking an extra trade though, so you have to think about the rate that you're trading there. So if you're making a $1,000 trade, and you have to do it twice, or do $1,000 worth, then what's 10% of that, or 1% of that? That would be $10. Well, if you can get 0.1%, that would be $1. So at that stage, compared to trading against Bitcoin, you're paying a little bit there, but you could also be paying that little bit of extra rate just to have a market that has a different price number associated with it, and within such extra volatility. And can sell alts and can sell altcoins for BTC and fiat later on because the whole point of the strategy, and it's the on the link below, the amazing strategy for trading two coins together. But when you get situations where both your coins are very nicely and they're both in big upruns, and then you can just take a look back and maybe take some of your coins and just sell it for Bitcoin, and then do what you want with that Bitcoin. Maybe you use it for buy orders later on, or however one may wish. But even for the bottom part, I think it becomes very important. Theta right now is 2,700 Satoshi. So you might say to yourself, you know what? I just want to put a sell order in. Let's put one in for say 4,900 or even 4,850. I last bought at 26, we'll say, which I kind of did, and it goes up to 48. You're getting a decent sized gain. But what happens if you have just one of these days where they both go up together? And I'm still waiting for a spot where all the cryptos, for the most part, have a good period of time, multiple weeks, where they all go up together. But that's the situation where maybe, oh, you just put a sell order in, yet the Dash coin went up 28% or 30%, and yet your ratio doesn't quite now state it's time for a sale. Well, I can just take what I sold for Bitcoin and maybe try to buy it back cheaper if it goes below 48.50. Just to measure upon that point. But it's, and I'm going to show it soon, but it's always about ensuring that you sell right proportions so that no matter what the market does, you're going to be able to handle the situations and basically not sell all your coins when the market can still go up. Now let's move on to volatility. And I'm going to have to explain what this is and definitely how it's calculated. The time frames, this pretty much goes back to its early days. And how it's calculated is it takes its 3-week volatility, or the highest price over the last 21 days, the lowest price in that time. What's the volatility? High minus low divided by low. So whatever the highest was, that just runs through. So right now, and this is, when I say now, I shouldn't say that. Right 3 days ago, or 4 days ago, when I actually downloaded the data, the volatility over 3 weeks was not quite 20%, well above 13, probably at around 18%, 19. And for it, it has been very low. Movements like this is just magnificent. To be able to go up 13 times in such a short period of time, just magnificent. But the way I look at it is two things. One, having volatility movements coming back up to here, where you have like 50% moves over 3 weeks, that's fine. That's fine with me, especially because one of the important things I think about crossing two together is to ensure at least one of the coins has very good volatility. So therefore, if you like low volatility coins like Dash, Ethereum, Litecoin, Bitcoin together, they don't have as wild of moves. But Theta, it will. And if you can put two together, you could have a movement on steroids, as I did a recent. I showed earlier in this channel a few days ago about GRS and DGB together. Oh, I mean, it was just fun to play that game, and you can play it in real life. And after all, it's set up so that it's just buying and selling, which is what you can do on exchanges today. Now, as far as the DGB volatility is concerned, from the less amount of periods, more. It's definitely a lot higher. In 2017, this thing basically went up 25 times. But what's even more important is this line is near the 100 number, which meant it held and stayed above that number for 1, 2, 3, 4, 5, 6, 7, 8, 9 periods. And these are 20 days per period. 180 days, but a half a year. That meant over 6 months that if you were to look back at the last 21 days at any time within that period, the highest price was at least twice the price as the lowest price. And that meant for amazing movements in whatever you were crossing this against, even if it was just Bitcoin. But if you're taking something else, like again the GRS, then it could be an interesting situation. Now, one thing what happens is it went over a period of time. If you get a sustained uprise on two different coins, and then what's going to happen is all you're doing with this strategy, it's never caring what the price of it is against the dollar, and even for that matter, at least for your ownership, what it is against Bitcoin. But when markets go up together, what you're going to notice is, oh, I should be selling more because I'm in a spot where coin A, we'll say DGB, has went up, say, 3 times, and my other coin I'm doing it with has went up 2 times. And you've been making only a few trades because, well, it gets to the spot where, okay, I want to sell with it going up, but both coins this one day went up 20% each. So the ratio didn't change much. And in spots like this, you would end up buying more of a coin that's been going up, selling the one that was going up even more, which is fine and dandy within the mathematical strategy. Of course, one more advanced thing would be, okay, well, why I'll still play the strategy, but why not just reduce my liquidation for what I own, sell both coins against Bitcoin, and if the price of them goes lower, then I'll buy them both back at a better price, of course. And the one thing that I've been asked about is making a spreadsheet for doing this, which I'm not going to do. I've explained how to do it, and if there's any individual question, just let me know. If I can help, I'll try to do my best. But this is what I'm doing for myself. It is so not quick. I mean, quickly made, yes, but this is basically it. On the top, this is a trade, so 228. I decided on this day, starting at a price point of 42.89, I'm going to trade. And I need more DGB, and I got a whole bunch of Litecoin, so why don't I just take about 3 and just buy some DGB, which is what I did. And then from that point on, I would set up, okay, so at 4,300, I'm going to either make a trade when it's 3,000, 3,600 or whatever, or something over 49. And on March the 6th, that's what happened. So I took 1.2 Litecoin, sold it for Bitcoin. Then I took that Bitcoin and I bought about 5,949 of them. 5 days later, the ratio went back down to 42.79, so I took 5,400 of my DGB from my hardware wallet, put it on the exchange, takes about 6 minutes maybe, and then I got Bitcoin. Then I took that Bitcoin, bought 1.2627766 Bitcoin, but I had to pay 0.001 to get it off the exchange. The next day, the ratio goes back down further to 37.46. So therefore, I took another 5,000 DGB, sold off on the market. This time I got a little over 1.33. 3 days after that, March the 15th, the ratio back up to 42.97 or 4,300. So I took 1.3 Litecoin off the hardware wallet, and that translated into almost 5,587. And then today, March 27th, I took another 1.2. Price point was 49.76. My thing told me to trade at 49.60, so I pretty much got that number. Although when I did the ratio, it came up. I just put the ratio in here. I just manually put in the price of Litecoin and the price of DGB, and then it pops it up nicely for me that way. And these ones are bold because these four have all crossed each other. So therefore, the situation in here of these 2 points in here, see, I gained 0.06 Litecoin and about 550 DGB. And on the bottom one, gaining 0.03 Litecoin and 587 almost on the DGB. Now what I've done also is I take the sum of everything, not counting this. This is negative one of these numbers divided by the other for average price. But the sum of my Litecoin, I'm down 1.103 cents starting. And I'm up 7,108 of the DGBs. Average price 6,440. And in here, this is manual entry. So if the market goes below 43.25, I'm going to do another short-term trade of around 5,000. And then if it goes up to 57.25, same thing. And then LT stands for long term. If it goes below 3,000, I'm probably going to take a number of close to 15 to 20,000 of them. And it's either 3,000 or 6,000 basically. And then manually, what happens is when I enter in this number in here, it'll calculate automatically in here what it's supposed to be, as that is part of the calculations. And even for that matter, I got a bunch of scribble on the right hand side, and I have no idea why I wrote this or what these numbers even mean. But at one point, I was just scribbling around, and I don't know what they are. But this is all part about risk reward management, understanding portfolio, understanding where you are, understanding how many you can allocate to sell. When I entered into DGB, it was very important. Okay, how many BTC do I want to be worth? How am I going to sell when it goes to the small levels and the large levels? So on and so forth. And then the video game I made, I mean, I played it over and over. So I'm basically playing it in real life. Thank you for tuning in. Have yourself a great day. Bye bye.